Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to go over, of course, the dump that we're having on the chart today, and that was pretty much expected. Yesterday, I did call out that we would likely have a possible fake out. The fake out was extremely mild, so when I was reporting it, we had already dumped, approximately, like a 5%. Nothing too major to write home about. Bitcoin does that pretty regularly. But of course, we were bouncing up, and I had made a video to warn that on the weekend, watch out because we might have some type of fake out. Was it here or was it there? One of these places. But we were pumping up and people were thinking, oh, okay, maybe we're going to recover this. We're just going to bounce at these support levels over here. But the reason I wanted to warn you that we had a likely fake out was because we did have that, directional Stokes pointed to the downside, of course, on the daily, and then also our volatility over there on the CME chart was on the ground. So, whenever we have this extreme volatility, plus the Stokes pointed to the downside, then, most likely we're going to have continuation to the downside, and it's probably going to be a 15% to 25% move. That back data was measured by Crypto Crown. And so, however, there are other ways to look at it. It's just that it really is that good of a system. So rather than go over the additional two ways I have to measure that, I'm just going to leave that with you because both those indicators are free, the BBWP as well as the Stokes. You can use the regular Stokes. I'm using the advanced Stokes. I was able to get it while it was still free, but they're charging now. But you can just use a regular Stokes to be honest, the stochastic. Going back to the 24-hour charts, of course, we do have that continued drive down. That's unlikely to change. One thing that we should point out really quick on the CME chart is that it did close at 28,920. But on the 24-hour exchange, we're currently 27,473. So what we could do is we could go ahead and put another CME gap, kind of a gapola there around 29. Let's see, 28,920 all the way down to whatever our current price is, right? So we have a gap over here that will need to be filled, or I'm not really sure exactly how the chart might handle that. The economic news has just been pretty bad, but we should be aware that the weekend price action might end up retracing on Monday just to fill that gap, or something might happen that could fill that gap. I think I also have other CME gaps marked out here. So yeah, we had like an intraday gap over here, and then we have an actual gap up here, and we still have half of this gap. The whole gap wasn't filled up yet. Only half was filled by this wick, and so there is, I think technically there is a gap over here around 25,000, a little bit below 25,000. So we now have a chart that is full of gaps. Bitcoin is getting shot up. It's just full of holes, so it's turning to Swiss cheese. And this is going to make price action kind of unpredictable because there will be pressure on these exchanges, which primarily make their money from information, right? The information has to be correct. Their value is solely in how good their information is. And if they have gaps in their charts, that's bad information. If there is just low price action there, the market tends to want to retest it. So are we going to, chop through this area? Are we going to pop up here? We can always fill gaps months later. It doesn't have to happen instantaneously. But the fact that there are so many gaps on this chart in this area, and by the way, this one is from back here. There's a gap back here, so If you're wondering why I have it so low, it's because it was actually on our run up. And that's what I mean that it can actually be filled in months later. It doesn't, none of this has to get filled in right now. But there could be a lot of pressure on the exchanges in this kind of strange economy that we're in to get the price action correct, right? So that's just something to be aware of. I'm not going to, make too big of a deal out of that. So we can move on. Let's just go ahead and get a sense of where we are overall, right? Because I made the Alpha Origins channel so that we can take a look in the bigger sense, the big picture. We can zoom out and look at our origin channels just to see how we're carving through them. Of course, Bitcoin was highly undervalued, back in these 2015 days, all the way to 2017, and then pow, we started to have these crazy blow off tops where just everybody FOMO'd in, and that kind of set the expectation that everyone had for the future. But of course, what goes up must come down, and so we did retrace. And we are kind of using, this part of the channel, this part of the Alpha Origin channel as support for the best buying opportunities of your life. I've made a video on how to use certain tools in order to, um, get the best buys of your life. So go ahead and check out the Gaussian channels video that I made, because sure enough, we are ending up breaking down across this yellow line, which I had printed a while back, and we are now quickly approaching this red line, which is just going to be a very high value area. Where is that going to come at? It's going to be somewhere around $22,000, $20 to $22,000, and that would provide yet another kind of green buy box for us. Now, that's a very simple way of looking at it. Um, it's hard to just pigeonhole things this way. It is possible that we break down further, that we have a really bad economic situation and we start to break down into these really undervalued areas again, after being overheated for quite a period of time, especially with that extra liquidity that was put in the market by that, $5 trillion plus, just money printing. But, in general, we can consider that we are officially in areas that are good to DCA in, okay? Because we don't know where the bottom is. We don't know how these markets will turn around. And if you're not ready to DCA at these levels, I mean, but you were DCAing in up here, that makes no sense, right? Because the whole point of me making these, origin channels is so that you understand we're overheated in these areas, right? And we're cool down here. So just every time we dip down towards these dotted lines or these lines, you might consider to just DCA a little bit, understanding that the red line represents a supreme value, historically speaking, in the recent epochs of Bitcoin, and that if we ever get into the green areas, that's just going to be the buy of your lifetime, okay? And I've set this up so that you can conceptually be prepared as opposed to be screaming in fear with the rest of the market, and so that you may consider, right? And not financial advice, but you may consider that, these could be possible buy opportunities. Of course, there's a lot of politics involved, there's a lot of economics involved, there's personal situation, and there's a whole lot of risk. So, consult your own financial advisors before making your decisions, and understand that not all assets in this industry are the same. If you want to have the most reliable, it's probably Bitcoin or Ethereum, and anything else, you really, really need to do a lot of homework on. And don't listen to the people who are bullish on those coins. Listen to the people who are bearish on those coins, and listen to why they're bearish on it. And if the worst that you get is just that, somebody doesn't like it, but everything else is like, it just has this or that small problem that they could fix it up, maybe that's a pretty good sign. But if there's a lot of people saying, oh, it's a scam and that, it's a potential rug pull, or, you know, the contract has some issues, or blah, 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 you may just have to, dig a little deeper before you put any significant amount of money into it. Again, like this industry can be very risky and you can lose everything. So as you look into these channels, as you look into possibly DCAing into these channels, just understand that you may have to hold the asset for a while before, if it continues to dip down or just go sideways, you may have to hold that asset for a while, and you'll want to make sure the project is going to be around, that the people are ethical who are managing it, and that it actually does fulfill some need in the industry, which a competitor maybe a year later can't just easily fill just by making kind of a copy of whatever they did, right? And so that's why Bitcoin and Ethereum are pretty reliable, but most other coins have very, very severe risk, because they can easily copy each other. And some of them are just like literally the same contract with different names. Okay. So again, I just want to emphasize, please be careful if you're new in this industry. Let's see, if we go ahead and take a look at our fib circles, you can see that we're continuing to round down this fib circle as I've set it up here. And it's just so funny that this is actually rounding around the curve of the fib circle. So, take that how you will, but there does seem to be this arc here and this arc here, and we're putting in another arc. And so that might suggest, even this area had that kind of arc that seems to be projected from up here. So it does seem to suggest that we are, in an actual fib circle that aligns with these areas. And as you can see with these other fib circle areas, you reach a bottom and then you pop up. So conceivably, this is the circle that we're going to be popping up off of, okay? Um, I know a lot of people like to dismiss fib circles. They think there's something shady about it, but honestly speaking, it's no different than fibs. Okay, guys, it's just it's a different way of doing fibs that looks at time also, not just horizontal levels, and that may not really make sense to just the casual trader, but to bots and algorithms, it can have an impact. And so as we look at how this epoch of Bitcoin ended right here on this fib circle and then popped up, and then sure enough, we broke down and then popped up. And look, we curved all the way down on this one, and eventually we're probably going to pop up to this one. And maybe we even land somewhere on this fib circle. Who knows? That would be interesting. We can follow along. Or maybe a new fib circle will be born, right? But just wanted to show that for you because it is quite interesting that we are breaking down along this fib circle, which I had been setting out here for you. And then, of course, we also have these macro fib channels, and a lot of people don't believe in these either. But as you can see, we had a hard rejection, kind of traveled down the fib channel, hard rejection, hard rejection, hard rejection. This was kind of mixed, but we did bounce off of it nicely. Hard rejection, bounced off of it, rejected here, traveled across it, hard rejection, traveled all the way across to the next one. Right? Look at this beautiful bounce right off of it all the way to the next one. And again, just breaking down along these fib channels. And so I'm not going to dismiss this. Why should I be the one to dismiss it? Probably we're going to continue to break down. And where would that lead us to if we did break down onto this line? It would be somewhere around, 20,000 to that 22,000 if we kind of get to the middle and retest the top. Who knows how far down we could travel this? But in general, you can see we don't tend to put in, too long of an arc. We've kind of been in here for a while already. So it would just, naturally look like around $18,000 would probably be where we start to pop out of it. Again, so this is a couple different ways we've been seeing that 22,000 to 18,000 might be a good range to look at just by these kind of weird macro perspectives. And I'm not lending any viability to any of these. I'm just showing you, what's on the charts. Then we also have this kind of macro channel. This is a little bit of a janky one, but it does show the recent time frame pretty well. And you can see kind of wick down here, got to the top of it, held onto the top mid channel, broke out of it, grabbed the top mid channel, broke out of it, grabbed the top mid channel, broke down, broke below the bottom mid channel, but held on to the mid channel eventually, and then crossed it. And look, held on to the top of it, and look, we're holding on to the bottom of it. Now, what would that suggest? That would suggest that maybe, we could break down from this, but it wouldn't be too traumatic, and that would suggest around that 22 to $18,000 as well. Um, Assuming we don't have like some type of major breakdown like we did, to run up above it. I don't really put a lot of credit into this. I'm just wanting to show you how price action is running up this diagonal channel. And of course, this does contradict a little bit the alpha channel that I have here, but I just wanted to put it out there just to suggest that there might be a different way of looking at these things. You don't have to stick to one perspective, right? So let's see, let's go ahead and take this off. Well, let's see. Yeah, this suggests, well, we could just be in a mid kind of zone. You can see I can kind of make another dotted line in the middle. And if you really look at it, look at this, this wick and this wick, it does look very parallel in the middle of this channel. So if I was able to, make just another little alpha channel there, it would be something like this, maybe a little bit lower or something. And it probably corresponds to some, yep, there's some little price action right there. There's the top right there. There's a wick right there. There's some price action right there. And so it looks like we're just kind of holding on to a little zone in the alpha channel, but that most likely we would continue going down because it's not a major level, right? Like that's why I don't even have it really printed on. It's just kind of like a hiccup along the path, whereas the next one is the major channel. So if we do continue to break down, I would suspect, at least to that 25,000 again, or potentially 25, 26,000, right? Something like that. If we are starting to move sideways, and then maybe we start to break down, again, right? We can pop up or we can break down. But again, like just because it stops midway, just like right here, it doesn't mean that it won't continue. In general, these levels are highly respected. Let's go ahead and take a look at this concept of the midterm. So here's another way of looking at it, okay? So just from the very, very recent epoch of Bitcoin, we can see the low here, we kind of broke through it. And then what are we doing here? We're kind of like, we broke down almost like this during COVID, and we're actually popping up to the top again. Now, that was based upon the, what was interesting here was that, we actually did have breakdowns related to the top of our, not sure why I'm showing these at the same time. Here's another one that, we do have this relationship where the distance that we fall is equivalent to the top of the kind of, exuberance that we put in the market. Like if there's that diagonal, we tend to put in tops, and if you just isolate the top, then the measured move of the top is actually how much you end up breaking down to the absolute bottom of the market. So this top, here was the bottom. We have kind of a top here, and that's the bottom. And, this is a little bit questionable because, we could also consider that this was a top. And then the scary thing is that our breakdown would be like this, which would put us around $14,000. So now we have kind of a competing concept that would put us around $14,000. And if we look at the alpha origin channels, that's not really unrealistic, is it? Because we did that during COVID, and in fact, we got another dip down. And so that would suggest that we could actually get pretty reasonably, into this kind of 14 to perhaps $20,000. And so we really have to be open-minded to 22 to $14,000, and that's getting to be a very big range. But we don't want to dismiss it because we don't want to limit our DCAing capability, right? What we want to do is make sure that we have the ability to DCA at these different levels, just in case these things do play out. You want to have cash on hand. Of course, we also have, this type of arrow that gets put in. If you consider those tops, it does tend to form an arrow, which then ends up getting broken out of. You can see it kind of over here. You can see it here. You can see that kind of arrow shape just gets repeated. And if we are actually at the bottom here, then that would suggest, um, perhaps a breakdown to 25,000, right? Something like this. Maybe even a wick down to scare people, to that 22,000-ish area, 23, 22,000, and then kind of curving up and breaking out. So again, a little bit more credit to that $22,000 area, right? If we are looking at our scale of $14,000 to $22,000, that $22,000 is getting a lot of playtime in these different concepts that we're developing. Of course, I did do some mathematical work in order to try to conceive of, the potential path that we could take here. This does appear to be misaligned. I'm not sure why this got shifted. That's weird. I'll have to take a look at that. It got moved over, and I'm not sure how that happened, but perhaps I can just drag everything and bring it back. Oh dear. Hmm. Yeah, I'm not sure what happened. TradingView had some error there, but yeah, I wish that didn't happen. That's kind of annoying, but it's okay. This was just a rough concept. Not sure why TradingView moved my charts because this was highly important to be aligned, and I see many features that are just completely misaligned right now. So weird. But yeah, it does suggest that this type of area would be, this type of area would suggest a bottom again in that kind of 20,000 to $25,000 area. So again, just lends a little bit of weight to $22,000, but we do stretch it out to 25,000. If you just wanted a bullish model, I did develop a bullish model which would look something like this. And it does look like we are continuing to play this out. Even though we are falling quite a bit on the charts, it's not like we haven't been at this price before. So it is conceivable that this bullish model could play out, again, based on some of this math and then other stuff. Wow, that is just really messed up. Stupid TradingView. But they're supposed to preserve the charts perfectly. I mean, consider if you're doing professional work using TradingView, right? And you need to make a presentation, to like a Fortune 500 company, and suddenly you showed up and all your charts were all messed up. Like that would be horrific, right? So yeah, they really need to fix that. But it does look like we do have that kind of path down. If we did kind of double bottom or a little bit lower, and then popped up and made a higher low and then perhaps had some run. That this would be kind of a bullish model that I could suggest, and then that would suggest actually purchasing around that 24,500 to 25,000, just at the most. Consider conservative price points. And if you just want some funny stuff, just to kind of lighten the mood a little bit, we do have these banana shapes that tend to get put in, and there are key little points where it hits along the path that suggest the curves, right? And this is a little bit distorted. This is a little bit distorted, but otherwise we have these kind of banana shapes, and then at the end, a new banana takes hold. And I projected that we would have this type of path, like we were down here, I think, and no, I drew this from this one. I drew this, the top of this banana from this one. I suggested that a new one would start here. And then I took a fractal actually of this shape right there. See the price action? I took a fractal of it, and just to suggest, if we did put in that pattern again, what would it look like? And then I drew a banana path around it. And look at this. The price action is almost following it exactly. How stupid is that? Right? Like that's incredibly stupid, right? Like it's completely brain dead. But if you consider how many bots are in play in this market, sometimes you get these weird patterns. And I'm an out-of-the-box thinker, a little bit wild in my thoughts, while other guys are kind of screwing around with harmonics, like wrecking their brains. I'm drawing these stupid banana diagrams and getting almost 100% hit rate on since April off of a stupid banana fractal. Okay, so that's how dumb crypto is. But yeah, well, there you have it, right? And ironically, I made this bullish pattern, based upon completely other metrics, but it's actually aligning with the banana. You can see it hits the bottom of the banana right there, the top of the banana right there, and this was based upon an actual model with like where I was being very serious, and that would suggest another banana like this and then one like this perhaps. But I'm not going to go that far. This is just for fun, and it's just to show you just how stupid like the bots in this industry can be and how they print these patterns. So don't take it too seriously. Have a little bit of fun. And I'm going to show you another stupid thing, which is I just call it breaking eggs, just because. I mean, you could call it like a worm eating through apples also. Like the worm gets into a rotted apple, kind of eats to the other side, and there's this sort of diagonal that's put in, right? And here we have one. It's just from the lower third to the top third. And here it like traveled again from the lower third to the top third. And then this time it flipped around, right? It went from the top to the lower third. And again, like, you can align this slightly differently. But and then here it recovered it to the bottom third to the top third, right? Something like that. And then this same thing, like it's so you can see what I'm getting at, right? It has this kind of diagonal that gets put into the egg every time. And what would that suggest? Just if we just follow this one, right? What would that just kind of like what we did over here, right? And again, these eggs got moved around compared to where they were previously. I think something's happening with TradingView where they're moving the charts around, but it was aligned much better previously. Not sure what's going on. Anyway, my point is that it would suggest that we end up breaking down into this in this area. As you can see, every one of these eggs, and again, I just want to emphasize, this is just kind of like a stupid, silly idea. This doesn't have to happen. But again, I just notice strange things sometimes. I'm quite an imaginative person, and so I can see these things. And there's never like an extreme, right, change to this pattern. It's always very similar. And so if you begin in this top third, it would suggest that you're going to end up in this bottom third. And where would that be? Around that 25 to $22,000 area. and that just so happens to align with the bullish perspective. So what can you make of that? Probably nothing. Again, just having some fun here. But there you go, breaking another egg to the other side, and as expected, okay, as expected. I just wouldn't be surprised based upon this if we just ended up around 25,000 before perhaps we put in another egg, either bullish or bearish. And I'm just being silly here because there are, obviously certain things that we should consider very seriously, which is that um, we do have this channel which we are breaking down from. It looks like we are trying to retest it right now, or that we have just retested it, probably on the hourly. Yep, broke down from this channel, trying to retest it, and probably we're going to continue to the downside if we don't, grab a hold of this channel. Like this is like the slide that we're sliding down, and we just fell off the side of it, right? Like it's not easy to get back on top of the slide. Most likely we're going to keep going down. I just suggest, based upon the price action, on the other side of the chart, that there are some of these points that we might just naturally consider, like 26,000. Um, this 25 is actually related to the CME gap. So if I just flip that on, you can see there's a CME gap there. And of course, then we have like that 24,000, which would be another kind of support area over here. And below that, we can have other, concepts. Um, let's see. Do I want to do that? Yeah, let's go ahead and put on the monthlies there. I just add some more lines here. So, you can take a screenshot of that if you want, or just pay attention to those green numbers, the green ones on the chart. And those would just be natural areas of kind of bounciness. The thick green lines are based upon the monthly. The thin green lines are just based upon like kind of the weekly areas. And, some of them are just kind of really weak. So perhaps like the daily or something. But, or I just made these top ones solid because that's the area that we're in. And then the dotted ones are still weeklies, but the thick green ones are monthlies, right? So you can see that those monthly lines should be pretty strong, so that if we do end up breaking down, we could catch in those areas. And I'll return to this concept a little bit later. But first, we want to just go ahead and take a look at our downward path here. We do have this kind of downward path, and I just suggested previously that, based upon this downward channel, if we did continue to break down, we'd probably use this as support. But however, we ended up going in an upward channel, right? So you can see we started to climb upwards, from this area. And so I tried to figure out, what was the upward channel we were in. But it turns out, I think that, we probably weren't, oops, that we probably weren't in an upward channel, but that we've probably just been in this downward channel with like a couple extra layers. And so once again, we're in the middle here. Let's go ahead and extend the line right. Extend the line right. And extend the line right. And so you can see where we're breaking down to is actually back into this downward channel. And look where we're bouncing. Hey, surprise, surprise. When we broke down from this like really like small scale channel, we fell back into this bigger channel and are just kind of getting hung up on the midline after having been hung up on the top of the channel. You see how that works? We were sitting on the top of the channel, which just corresponded with this kind of like a long horizontal support, and now we've broken down to the middle of this. So we're probably going to chop around on the top of the middle and then break down to here, probably around $26,000, just because this is a midline. It's not a major support. And you can see as we were moving through this area, right, like that midline didn't really give us any support. Okay, that midline just was the middle, and we would get hung up on it sometimes, but we would always touch the top and bottom. That's why I would suggest we'd probably continue to go down or, chop around there, something like that, and probably get hung up on this kind of like a horizontal here, around 26,000. Maybe fill in the CME gap, get, hung up around 24,000. And I really wouldn't want to project any further than that, but again, like I've marked out these levels for you, and we could just go all the way down to this monthly, which would be the 20,000, and that would be kind of a wick that would kind of align with this one. Maybe even to 18,000 could be a wick. However, we could get front run and maybe 22,000 is the bottom, right? Around this line here. So that's why I have the weeklies and the monthlies on the chart, and also why I'm paying attention to these diagonals. A lot of people dismiss diagonals, but I personally think they can give you a lot of good insights. And so you can see exactly what we're doing only because I had marked out this downward channel pretty much a month ago, right? And I just extended the lines to the right. That's all. Literally the only thing I did. And yet, look, perfectly on contact. So I don't want to make too much of that because, obviously price action can just do some strange things. But it does look like we were in this downward channel. We had a bounce off of this monthly. We weren't able to break up, into any bullish position, and then we broke back down into our downward channel. And so if you can understand what Bitcoin is doing, maybe that'll help you visualize where it may be going, right? Because we do seem to be radiating downward. And if you look at this channel backwards, you can kind of see that we actually have been following it ever since the top of the market. Look at that. And I bet if we extend this one right to the very top, and then if we look at this wick, and of course I don't have that lined up very well, but if we, just get it somewhere in the neighborhood, there you go, like that. Then you can see it was even supporting up here. This wick right here at 25,000, 25,500 was the same line that supported us at the top of the market. Interesting, isn't it? And so where do you think that we could go? You could kind of use your eye to follow this, that most likely we're going to travel down this line, right? Again, you guys know I had this marked out for at least a month, right? So I'm not like fudging anything. I only extended the lines. That's it. Even the dotted line, if you extend it, right? Even the dotted line, if you extend it, it kind of captured that mid area. And then, we can just kind of imagine, that there are also, let's see. So that one, I didn't actually align it properly. It looks like it's diagonal, but that's because this was kind of like a curved thing, right? Let's see if I can just, oops, oops. There we go. Just make that dashed. Get rid of that one. And then perhaps suggest something in this area, something like that perhaps, where we had kind of a little bounce there. And yep, right there. Look, we wicked right to the mid channel. Look, we held right above the mid channel, broke down, recaptured it. So, there's something to this. Obviously we can play around with it. None of this is perfect. It's all, you know, just statistics, right? And averages. So I don't want to, overemphasize this, just to suggest that, we do tend to travel along it. And so if you wanted to think where could Bitcoin possibly go if we continue to go down, you would use this as your line of sight. And again, I had that marked out for a month. So, this is just to now look at the future as opposed to the past. That's why I drew it, right? That's why I drew it. So the upward channel just is moot now. Probably could delete it. But if we do think about horizontal, buying areas for DCA, um, you know, this looks like a mess, right? It looks like I just want to be buying at every single price. But there is some method to this. You'll notice there was no buy boxes up here, right? Let's see, can I get rid of that downward? Let's see if I can get rid of this one. Yeah, let's just get rid of those lines. And I think I can get rid of these monthlies also. You can see how I aligned them, however, right? With like the monthly supports. And the green ranges are kind of around those monthly supports, right? Including up here and significant numbers. But if I just remove that, you can see that I have these smaller green areas which are concentrating more on very specific prices. And then I have 3 highlighted in the middle here. So we can see that this is narrowing down. The only thing that this is telling me, first of all, the way that I have it outlined here, is that I really didn't want to buy at 30,000 or any price above 30,000. And that I think, you can see how this, like, these boxes are getting hotter, right? They're getting brighter as we go down. I want to buy as low as possible. And then, these are the ranges that I would consider buying in, but I would also consider that we could wick below the ranges, right? So these big boxes are the ranges that I'm looking at based upon the monthlies, monthly supports, and all those things. But then the small buy box is where I think we could like stretch down because of the fear in the market. And so if you bought here, you would have been in pretty good shape, at least for this move. Like you would have had plenty of time to take profit in this buy box or around that buy box. You could have taken your profit and then gotten out once we broke down under this price, right? This was just, to be honest, I didn't buy at this level. I only bought at this level, okay? Or as we bounced up. But the whole purpose of having this thing was just to say, like, this is the first place to consider, 29,900. It's under that 3,000, right? Or 30,000. And then the buy box that probably most of you missed out on, I had marked out here at around 26,000, 25,500-ish. And of course, the target for it is the bottom of it because I want to buy as low as possible. And that ended up working out quite well. And then same thing for this one. Like this is the range. You can see all this price action here. But in reality, if we fall down to this level, we could get quite a significant wick because people would be scared out of their minds. And so 20,000 to 23,000, or 24,000, like this whole range, I'm open-minded to catching it wherever I can. And then if I'm in this box, I am going to DCA, absolutely. That's why I have a pink line around it. Same thing here. If we end up dipping down to 18,000 rather, I am going to be buying in that box. And then I don't actually think that we will go lower than that. If we have any bottom to this market, I think that probably this is the real bottom, and these are the real buy boxes that I would want to target. You can target whatever you want. This is not financial advice, just sharing my ideas. However, if it just ends up being that the economy really, really sucks and things are just much worse than what we expect, then I would consider these lower ranges. And here you can see a marked difference. This is at the center of this range, whereas this was at the bottom of the range, because now I'm flipping towards the upside, because I don't actually think we're going to break down this low. And so if we do end up wicking to these levels, I want to make sure that I catch them. So I'm not really targeting the bottom of the boxes. I'm targeting the top of the boxes because I want to catch it. It might just be so fast of a wick that you don't catch it. So probably I want my purchase orders in these areas, which would be something like 14,500 to maybe 16,000. And then if just something crazy happens, then maybe 11,500-ish. And then I would even be open-minded to considering like 10,000, you know, even lower, but I just don't think so. But why not? Why not be open-minded to it? Okay. And what I can show you if what that looks like on my Alpha Origin channels would be, let's see, where is that? Up here. Something like this. See, so I have a price level pretty much marked out for all of these areas. And then, of course, um, let's see, where was that downward channel? And you can see the potential trajectory that we might take, right, as we pass through these areas. And so, you know, potentially this month we could hit, 22,000 or something. And then maybe, a month or so later, maybe we could get into that 18,000 and so on, right? Like maybe 16,000 by September. And I don't know, I'm just going to play it by ear. You see how that pink box, it actually aligns diagonally with the wick on COVID. And so if we look at that line, right? If we look at that line, let me just turn it into some color that we can really see here. You can see I'm not being unrealistic to suggest that, we could get into that area. And of course, the red line is where you really do want to be buying, in my opinion. Like I wouldn't want to miss these buying opportunities if we came across it. Um, However, I have to understand that there is the chance to wick down to this dotted line because we've seen it happen before. And so, of course, I'm open-minded to this third buy box, right? And it might just be a flash in the pan, just like this one. And then I have to deal with the higher levels because as time goes on, the asset appreciates, right? That's one of the points of considering time, not just height. So all these things considered together, this is how I would be looking at it. Probably we end up putting in some type of a cup. We start rounding out at some point, and then that will tell you that we hit the most likely at the bottom, if we start rounding out in these areas. Still not done yet. Still not done yet. I would just suggest that we also pay attention to these fib levels because, of course, just one moment, just want to bring this back to something reasonable. Because, of course, that, these top boxes here, these top buy boxes would be around the 382. I set them up specifically to be around the 382. And the reason for that is, of course, as I've shown you in other videos, we do tend to retrace to the 382. And let me go ahead and get the fibs out as pulled by the bottom of the moves. So we can see here, we actually ended up retracing to the 382 from the bottom to the top, 382, bottom to the top. We ended up retracing, this was the 236, but it kind of got front run. And the 382 actually aligned with this low ahead of it, which I think may have satisfied the move actually, which is probably why we didn't dip as low, because there was such a major setback here. But we basically got between the 236 and the 382. But just consider that people were getting very bullish on this asset because it was basically going vertical. And so it may have gotten front run. The 382 may have gotten front run. And this is an important concept because we may be facing the opposite, right? So the 382 was front run because of the bullishness of this chart. This chart is almost going straight up, right? Like this chart is just nuts in how it's going almost straight up. And so, of course, people are front running. It didn't hit the 382 over here, um, but the 382 was established in this first kind of leg of Bitcoin's life. And then, once we started going a little bit more sideways, then we return to the 382. You can see, like this is 382 pulled from the low to the top, and we return to the 382. And now we're going almost, almost horizontal. And so what I would suggest is that we have the opposite situation where the 382 may not even be good enough of a value because we're just not getting, we're having diminishing returns over time, right? You see these arrows are going down, right? I mean, they're lowering. And so diminishing returns, which means you don't necessarily want to buy in that high. You want to buy in lower, which is why I took an enormous amount of time to think about, the possible, way that we could consider the arc of this. And I would just suggest that we might end up at either the 382, which is that 22,000, or all the way down to the 0.5, which could be that 14 to 15,000. And if we got really bearish, okay, people just really needed more room for the next run because this is just such a low value because, they're not stupid. They can think. Maybe the next run is just going to be flat, right? Maybe we're just going to reach our similar prices as we did here, right? Maybe we'll appreciate a little bit, but are we going to $1 million? Maybe not. And so they want to buy in low. They don't want to buy in at these higher numbers, kind of the opposite of the issue over here. And look, like this is no fooling around, okay? And again, like this is the log chart. The real chart, is something like this, and it almost looks like we're starting to turn around, right? So you can see the real chart, like we had liftoff and now we're going flat. See that? It's kind of interesting to conceptualize it there. Like we went all the way up here, but now we're down here. We may need to retrace further than most people are willing to imagine. So let's go ahead and go back onto log. And of course, I have log on my fibs. If you're pulling fibs just normal, like off of log, you're going to have different numbers than mine, okay? So I have my fib lines on log because I'm on the log chart right now. So just consider that. And so if you're not matching up the same numbers that I have, just consider the setting on your fib indicator that you may need to switch on or off the log scale. And so the 382 would be approximately 22,000, and then zero point 0.5 would be approximately 15,000. And you can see the numbers right here. And then the 618, that 10,000. And yes, there is the possibility of the 786, which could be around 6,500-ish, which most people don't even want to consider. But you never know. And again, just going back to my alpha channels, and the buy boxes. So you can see I've lined it up with that 382, which is the most likely, and then the 0.5, which is, it's possible, highly possible. Like we have to give it the consideration. It happened back here. And then I've just marked out, the 0.68, 618, because, it is conceivably possible. And if we do break down to the 786, or the 886, like this industry is probably in trouble and going to have a much longer recession than we thought. But at the same time, I'll still buy, okay? Because we have to bounce somewhere, right? And so it's going to be a good trade. And typically speaking, these fibs are good buying places, and the also on the weekly, the EMAs are good buying places. And if we look at our fibs and our EMAs, let me just go ahead and turn off the alpha origin channel there. But if we look at our MAs, our 200 MA, it actually lines up at 22,000, and the 300 EMA lines up at 20,000. Which of course, both of those like pass through this area. And you can kind of imagine that this thing just kind of drifted, right? And so they all kind of hit this last area. And so this would be naturally a good target. That 18,000 to 22,000 would be a very reasonable target. Like you would not be foolish to target that region. But again, if this economy is just very shaky, we could consider even lower. And personally, I think the bottom would be around that 10,000 and maybe 10,000 to 12,000. But that 14,000, 15,000 has a good running chance. Like these are kind of like the underdogs, but I'll leave some liquidity available. And if I'm not able to buy there, then I'll just buy when we like move up. As we round out and start moving up, I'll just buy more at these levels, right? But I will still want to leave some capital just in case we drop down, right? And so, guys, I think I'm going to end it there. That was your alpha for the day. Just a straight TA, straight macro. Hope you enjoyed that. And again, you know, stay safe. And guys, happy trading. It's very, crazy out there these days in the macro economy. So really consider the risk that you're taking and understand that you'll have plenty of time to buy, okay? You don't need to be rushed into anything. Like there will be formations of bullishness that get put in no matter what happened. And you can see that we're bouncing right here. We're bouncing a little bit right off of the 200 EMA. So, you never know if we're even going to reach these levels, right? We could just potentially bounce just like we're bouncing, just like we bounced in 2018, we could potentially just bounce right here. And all of this is theory. It's a hypothesis based upon the health of the macro economy, which is pretty shaky, that we could see these lower levels. But again, really consider your own risk tolerance and make wise decisions. Don't just rush into anything. Okay? So happy trading and see you next episode.